but we do like to just put that up right before we get started. If you haven't checked it out, or if you haven't checked it out lately, please be sure to stop by and look up our lender services on our website, and you'll find all of the benefits in the Mortgage Advocate program, which include, of course, the rate advisory and alert service. All right. Well, let's take a look at what we have this week. It really will be mostly about building towards Friday and the March employment report. That, along with CPI and PPI data, are probably the two most important data points that we get for bonds. But it is a relatively busy week, and I would expect that volatility will be high, but it should stay in a tight range this week. So we may have some choppiness in terms of rates moving an eighth or a quarter here or there, but really would suspect that most traders won't go on a limb, whether that be in stocks or bonds, until we get confirmation of what that employment report looks like on Friday. And I've kind of jumped ahead to Friday, but only because it's probably the most important data point of the week. And it's expected to be up a couple 100,000 jobs added last month. That's already kind of baked into stocks and bonds right now. And so for any reason, we don't come in at that number. So on Friday, and that's at 8:30 Eastern, if that would come in stronger, showing that employment would be stronger than is anticipated, then that would, of course, probably spur further rally in stocks and further selling in bonds. It would likely take us to about, we suspect, probably 4.00% flat on the 10-year. However, for some reason that comes in weaker, then of course we could get, and actually probably would get, a pretty big sell-off in stocks and some run over into bonds. And there's no way to tell where that report's going to come in at all. But just so you know, that's going to be a pretty big data point. Stocks will be closed that day, and the bond market will be open until noon. So bonds will get a chance to react to that data point, but stocks won't. So let's go back. I'll go ahead and back up to Tuesday. And so tomorrow we'll get a couple data points, and one of them was a big mover for us last month. But start off in the morning, we'll get Case-Shiller. And so it's expected to show prices still slightly down, and moving that way, of course, they've moderated. But we'll see where that goes. Now, home prices are a big pivot point for stocks and bonds right now. So we've got that rated high. So you want to stay tuned. If for some reason, it would have to come in way outside the margin for it to move stocks or bonds, but it does have that potential. And then at 10 o'clock, we'll get the Consumer Confidence Index expected to come right in at 50, which is neutral. Neither good nor bad. However, that would be a recovery from last month. It came in as unexpectedly very low, and that was last month, and that actually spurred the move into bonds last time we got this report. And so we'll see where that comes in. If it comes in, of course, stronger, consumer confidence looks stronger than this reading, we would expect bonds to sell off a little bit, and mortgage pricing to weaken on that number. Wednesday, now we will get a prelude perhaps to Friday's number. At 8:15 in the morning, ADP will release their private employment index, and it's expected to show a plus 40K. And so many will use that as a proxy for Friday's data point. And so while we all wait for Friday, Wednesday will give us something to trade on. And so we'll see where it goes. If it comes in, if it comes in hot, then meaning stronger than expected, then most would expect Friday's data point to come in hotter, and we would see a rally in stocks and a sell-off in bonds. If, however, that report does show some weakness, that could help us in the middle of the week here. And also that week, and if you've been on these calls, you follow us, we do go ahead and list the other data relative to manufacturing fact orders. Those are watched by traders, certainly broader economic data points, but anything related to manufacturing and factory orders, those types of things, are going to have a less of an impact on bonds. Anything consumer-related is really going to be anything that's consumer-related right now, housing-related or inflationary would have a much bigger impact. But certainly, Chicago Manufacturing Survey and factory orders later in the morning on Wednesday have the potential to be market movers as well. And then Thursday, 8:30, again, all these are Eastern times, you'll get, as we get every week, the weekly jobless claims expected to come right in right in the number that we had last week at 440K new claims posted. And so, again, the extent that is shows a lower number, meaning there were less jobless claims, that would be bad for bonds. Anything that would show more jobless claims would be good for bonds. And then we'll get a trail of data that day that likely won't have much of an impact. However, I would say the ISM Manufacturing Index, even though it's manufacturing related, it does have the potential to move markets, certainly stocks, which would pull bonds. And so I want to watch for that data point. But really, again, go back to just everything kind of building towards Friday. And, I would suspect, again, traders to kind of keep things tight to the vest. I wouldn't expect the market to run away either direction, frankly, unless there's some sort of unexpected news out of Europe or some unexpected geopolitical crisis that we don't know of right now. But otherwise, all things being equal, unless some of these other data points, Tuesday, Wednesday, Thursday, surprise, the market should, my guess is that if rates were going to weaken, we wouldn't weaken by much more than a quarter to 3/8 going into Friday, and if they were going to get stronger in any way, wouldn't expect them to get stronger by more than an eighth or a quarter going into Friday. And then we'll get that Friday data. And that's going to be, again, it's some debate. I think it's actually the second most important data point we get every month for bonds. I think the most important is the CPI, consumer inflationary number. So there you have it. So that's kind of the way the week sets up, all building towards Friday. And Josh, I will look into the chat log here and see if anybody has any questions. We have lines on mute. If you have any questions over anything we've just presented, or you have any questions about anything at all relative to the market and where rates are going or what happened last week, certainly hit us up here in the chat log, and we'll take a few minutes to field those calls.